more evidence that stagflation is getting worse and that it is not transitory and that it is not going away anytime soon. So just in the last week, the Fed's official balance sheet rose another $91 billion to over $8.4 trillion. But we're starting to see even more data come out from companies and also from the producer price index and wholesale prices, whether that is in the US or Germany, of record or near record rises in these indexes, measuring wholesale prices and producer price index, big jumps in both of those, indicating stagflation. Meanwhile, this week, here with the Changing Propaganda Index, or CPI, which are the nicknames I have for the Consumer Price Index here in the United States, Wall Street and the PhD economists were trying to talk about a downtrend in the CPI, how it was below the inflation expectations. But the real world data is showing the exact opposite. So you have Wall Street money managers, PhD economists, government officials, deflationistas versus the actual data that we're seeing from companies versus the natural gas price that is rising. That's going to cause a lot higher cost of goods sold on many manufactured goods that use natural gas and natural gas liquids in the manufacturing process. Why was I so confident about stagflate tax lie? Because I've studied financial history, and currency devaluations and tax increases are extremely common throughout financial history. Not one, but both. So as the economy gets worse, governments take more and more control over the economy. In the past, when the government was like a monarchy, the king would tax the people more, the king would devalue the currency. Or if it was an empire, empires did essentially the same thing with currency devaluation, currency debasement, and increases of taxes on the populace. So unlike the Changing Propaganda Index, we see even more data coming out, whether that's in Germany with manufacturers or here in the United States with the producer price inflation numbers on wholesale goods, that costs of goods sold, manufacturing costs, are rising, and those businesses will be passing on the costs to customers and other businesses in the supply chains in the form of either shrinkflation or higher costs, or a combination of the two, the dreaded double whammy. Also, the other story, and I'll attach a link to it in the information and description section, was the CEO of Nestle Foods was saying that there's going to be higher commodity prices next year in 2022 than even in 2021. So the inflation is only transitory narrative is being negated, is being shown to be spin or a lie by the company executives themselves, saying they don't see a sign of costs decreasing. Because if costs were decreasing, then their profit margins would improve. They wouldn't have to raise. Customers may decide not to buy the items anymore. Sales could drop. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content research, financial education, and analysis than I provide in these short little free videos, there are now over 180 articles, charts, and audio podcasts behind the paywall. Really in-depth research exclusive for patrons, all for the cost of a Starbucks cup of coffee, only $5 a month. I think it is one of the best deals out there. I charge less than anyone else in the space for premium content. I think you're really going to like it. And just in the last 13 or so weeks, there are 29 new articles out on a lot of interesting topics about global macro, companies and sectors, talking about which gold mining companies are able to keep their costs under control, which ones are raising dividends, which gold miners are the better run gold miners that despite the paper price of gold getting smashed, they're actually still making a lot of money and raising dividends, and probably in the next 6 months will be doing a substantial acquisition because quality assets, especially cash flow producing mines with good profit margins, are heavily discounted. So expect mergers and acquisitions to pick up in the next 6 or so months. If you are a shareholder of a company being acquired, you're probably not going to get the best deal. If you're the company that's doing the acquisition, if you're a shareholder of the company that's doing the acquisition, that company's probably going to get a better deal right now because it is a buyer's market. It is not a seller's market, and valuations on discounted cash flows of producing mines with good profit margins are very, very attractive for acquiring companies. So if I could wrap up this short little video, we are seeing a lot more data points out that stagflation is not improving yet. So despite this false narrative that has come out this week here in the US with the changing propaganda index, or CPI, on the consumer price index numbers, claiming that inflation numbers are dropping, it's not the case. It's not the case from companies announcing earnings. It's not the case from executives giving guidance. It's not the case from wholesale prices. It's not the case from producer prices. It's not the case with natural gas prices and other input costs that are still rising. Oil prices are still trending upwards. Natural gas prices are up a lot. These are important for cost of goods sold. These are important for plastics. These are important for transportation costs. These are important for fertilizers. These are important for a lot of food costs. And the U.S. imports a lot of food. Despite it producing a lot of food, the U.S. is actually, and this was surprising to me, a net importer of food, an enormous net importer of food on a monthly basis and yearly basis. So overall, no evidence yet that stagflation is getting better, despite what the changing propaganda index said this week.